What are the tax implications of transferring shares to your spouse? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Transferring things to your spouse can be a really great tax planning technique, a great way to move things around to help with any tax position, especially if one spouse is a higher taxpayer, the other is a basic rate taxpayer, and you want to be moving things around to maximise what you're getting into your household. So the key question I always tend to get asked here is, well, what are the tax implications? Because if I transfer to their name, will there not be some tax implications? And the answer to that is potentially no. Now, under tax rules for capital gains tax purposes, there is a no gain, no loss approach to a spouse. This means that if you transfer an asset to a spouse, there is going to be no capital gains tax. However, what it does mean is whatever you paid for something, that will be transferred over to your spouse. So when it is eventually sold, they will have the same position as if you had owned it all along. So there's no immediate tax impact when something is transferred, but when something is sold in the future, that will have the same tax impact as if you had owned it yourself. Now, I say as you had owned it yourself, that is not quite the absolute case, because obviously we're now dealing with their tax position, and if they're a basic rate taxpayer compared to you as a higher rate taxpayer, that means that you're paying less tax overall because you're sharing that between both of your allowances and your tax brackets. So it does have an advantage, even though the gain is not changing at that point in time. If you are looking at transferring assets, it's very important that you appreciate you need to do this formally. You can't say, oh, I've given them half the house. That's not actually given half the house. You need to make sure that that is all logged with the appropriate authorities. So the legals are done for land registry and it's all done officially, so that it is showing legally that things have been transferred. If it's shares in a company, then those shares in a company need to be done on a share transfer form, and then they will get reported to Companies House as the next confirmation statement is completed. So it all again shows through that there's a share transfer form which is held by the company, and that it shows on Companies House who the owners, the shareholders of the company are on the confirmation statement when that's done. So there's a little bit of paperwork that needs to be done however you are looking at transferring things, whether it be shares, whether it be an actual property. But from a tax point of view, there is going to be no tax payable apart from the original cost of what you paid for it is what is transferred to your spouse, and then they'll get any tax implications from that when it is sold. This sometimes seems like the best option, and it can be really useful, especially if you're planning income, if you're planning on trying to manage inheritance tax, if one of you's got more than the other and you're looking at how you fit things together. However, do be aware it's not always the best option. It may not work, and you do need to just do a little bit of planning to make sure it is going to be right for you and your family. One question is it the right option for you? And I know we see a few where this can be used in great effect for inheritance tax planning, where potentially you may want to transfer all of it to your spouse, and it's usually the spouse that is unfortunately going to be leaving this planet first. And you can look at leaving potentially properties to your spouse and then passing them over on their demise, whichever spouse it is. And then when it is passed through inheritance tax purposes, the value of the property is passed at the market value. So there is a few bits where it may be you don't want it in joint names. You want one person to own it compared to having both of you own it, because there is an impact on how it fits together. So having things in joint names is not always the best solution. Having things in one person's name is not always the best solution. And sometimes it may be one person owns it and it's transferred to another, or it may be one person owns it, it wants to be in joint names for a while, and then it may want to be transferred again into an individual's name, so it fits with your inheritance tax planning as well. So as you can see, It's a relatively straightforward process with minimal tax implications to be moving things between spouses. Anything you do needs to be done in the proper format, legally, proper paperwork completed, but do just be aware of the longer term tax implications as you're doing these things, so that you don't find you go, if we'd have known, we wouldn't have done this, or if we'd have known, we would have definitely done this. So just do a bit of planning with your accountant, with your tax advisor, and then hopefully you can be getting the best result for you, for your family, and to manage your tax affairs in an effective, efficient way.
Hopefully today you've discovered what happens in terms of tax when you're looking at transferring something to your spouse. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.